Did you know that there's a US company out there that has larger amounts of debt than market cap? That's right, I'm talking about Dell Technologies, ticker DELL, and you see their market cap is roughly $45 billion, while their debt, $49 billion. As of 6 months ago, on our channel we've already covered many different tech companies like Facebook, AMD, and Intel, but we've never really seen a company like this. A company that looks fundamentally so good, but when you break them down, you have yourself wondering, how in the world has this happened? It all really started with Dell trying to have a simpler company with better structure. Dell wanted to spin off their company called VMware, and essentially what VM did and what it allows businesses to run multiple applications on an operating system that workloads on a single server. And so yeah, this sounds kind of cool, right? That's what Dell thought too. But as a part of the spin-off, Dell had to borrow roughly $70 billion to finance its deal making. And although VMware was able to pay part of it back, they were still in debt by over $32 billion off of only VMware alone. Now while these numbers seem absolutely insane, and trust me, they are, this was 6 months ago. See, according to macro trends, as we can see here, this is Dell's chart for their debt. And as of 6 months ago, they're sitting at $43 billion or $49 billion, and it slowly has been decreasing over time. And we actually saw Dell's long-term debt fall to $31 billion in this last quarter. Again, while this number isn't great, we've also seen an increasing downtrend of overall debt, as well as an increasing uptrend of overall shareholders' equity. And the reason why this is so important is because it shows that Dell is reinvesting into their stockholders. And this is really important with Dell actually having earnings very soon on February 23rd of this year. And this is really important for us because it will most likely increase Dell's market share as well as give a showing of how Dell's debt has been doing. Again, this is mostly just speculation, but from these charts, we can see that Dell has consecutively beaten their last 7 earnings by at least 10%. And the reason why this is so important is because I think many investors are underestimating how quickly Dell has been able to pay off their debt. This also ties very nicely into how consistent they've been over the past few years. But once again, people will have their doubts. When we look at their price to book models, we see that Dell actually has a $48 price target with a 20% downside. But then when we look at their price to sales model, they have a $73.17, 20% upside. It seems like we have a problem. We're stuck in the middle. But here's where we break it down. See, price to book just means that it's the difference between value of assets and liabilities. And so for Dell, it makes a lot of sense because they're high debt. But when we look at their price to sales model having a fair value of 73, while this seems really high, what all price to sales really is showing how much investors are willing to pay per dollar of each sale of the stock. And this makes a lot more sense because Dell should be undervalued by this projection, and based on the fact that Dell is making anywhere between $50 and $60 per price point, it makes it a really good solid price point for them at the $70 a share. So in my opinion, that $50 to $60 price range is really important for Dell, and I think if they can hold that until earnings, they will have a really solid shot at beating earnings as well as decreasing their debt. Again, it's really easy to look at these models and say, yeah, Dell is undervalued and should be a buy any day of the week. But as value investors, we need to get the full understanding of why companies are given certain valuations based off of some metrics, and getting an understanding of the whole idea behind a company and what the future may hold is how you can become a value investor. And this kind of just leads into a little bit of their trading. As we can kind of see here, Dell looks to be on the uptrend here, being over their 2 major moving averages, and I do think we'll probably see a slight pullback here to this $58 range, but most likely until this February 23rd, they will keep this price range and most likely keep trading into all-time highs, as well as most likely a huge beat on earnings day. Again, this is just speculation, and I know this video was a little bit differently structured and it's more into storytelling instead of telling you guys the straight numbers and stats. So if you guys are enjoying the content, make sure to leave a comment down below. Make sure to tell someone that you love them, and peace.